Ever wondered how to make your money work for you? Welcome to the intriguing world of investing, where the magic of compounding can turn your hard-earned dollars into a substantial nest egg. Think of investing as a journey towards financial freedom. It's not merely about stashing away money for a rainy day, but rather, it's about making strategic decisions that lead to wealth accumulation over time. There's a whole universe of investment options out there. Stocks that let you own a piece of your favorite companies, bonds that pay you interest for your trust, real estate that provides tangible assets, and mutual funds that offer a diversified portfolio at your fingertips. Each of these options carries its own risk and reward, but they all share a common goal: to grow your wealth in the long run. Remember, the best time to start investing was yesterday, the next best time is now. So, you're ready to dive into the world of investing, but where do you start? Well, let's start with the basics, shall we? First up, stocks. When you buy a stock, you're essentially buying a piece of a company. You become a shareholder, a part owner of that business. If the company does well, so do you. But remember, the opposite is also true. Next, we have bonds. Buying a bond is like lending money to a company or government. In return, they promise to pay you back with interest after a set period. It's a bit like an IOU, only much more formal. Of course, we can't forget about dividends. These are a portion of a company's profits that are paid out to shareholders. It's one of the ways you can earn money from your investments. Now, let's talk about your portfolio. This is a collection of all your investments. It could include stocks, bonds, real estate, and even cash. The key to a good portfolio is diversification. That's a fancy way of saying don't put all your eggs in one basket. Spread your investments across different types of assets to reduce risk. But before you start buying stocks and bonds, it's essential to have a clear financial goal. Are you saving for a house, planning for retirement, funding your child's education? Your goals will guide your investment decisions. They'll help you determine how much risk you can afford to take and what kind of return you need on your investments. Remember, investing isn't about getting rich quick, it's about growing your wealth over time. And it's not just for the wealthy. Thanks to technology, anyone can start investing with just a few dollars and a smartphone, so take the time to learn the basics, read books, watch videos, take online courses, ask questions, seek advice, and most importantly, start. Knowledge is power. Understanding these basics is your first step towards becoming a successful investor. Now that you've got the basics, how do you ensure your investments bring you profit? You might be wondering, well, let's talk strategies. One of the most important strategies to consider is diversification. Think of it as not putting all your eggs in one basket. By spreading your investments across a variety of assets like stocks, bonds, and real estate, you reduce the risk of a single investment failing and causing significant damage to your portfolio. It's like having a safety net just in case one of your investments doesn't perform as expected. Next, let's discuss dollar cost averaging. This strategy involves consistently investing a fixed amount of money at regular intervals, regardless of the market's ups and downs. The beauty of dollar cost averaging is that it takes the emotion out of investing. You're not trying to time the market, you're just sticking to a plan. When prices are low, your fixed amount buys more shares, and when prices are high, it buys fewer. Over time, this can result in paying a lower average cost per share. Now on to another crucial strategy: long-term investing. The financial market can be volatile in the short term, but historically it has trended upwards in the long term. By holding onto your investments for several years, or even decades, you give your money the chance to grow and compound. It's like planting a seed and watching it grow into a tree. But perhaps the most important aspect of investing is patience and consistency. Rome wasn't built in a day, and neither will your investment portfolio. You might face losses, and there might be times when you're tempted to pull out, but remember, investing is a marathon, not a sprint. Stick to your plan, be patient, and let your money work for you. So there you have it. Diversification, dollar cost averaging, long-term investing, and above all, patience and consistency. These are the keys to successful investing. Remember, investing is not about getting rich quick. It's about growing your wealth steadily over time. What does the financial market look like in 2024, and how can you navigate it? Let's dive in. The market this year is teeming with opportunities, but it's also riddled with complexities. We're experiencing an era of rapid technological advancements and unpredictable global events that are shaping the investment landscape. The key to navigating these waters is to stay informed and adaptable. The first step is research. Before investing in any asset, you need to understand it thoroughly. This means studying its past performance, its potential growth, and the risks involved. The internet is a goldmine of information, so use it wisely. Next, keep an eye on market trends. Follow reputable financial news outlets and analysts, and don't shy away from economic forecasts. These are your compass in the ever-changing financial sea. Finally, don't let fear or greed drive your decisions. Investing is a long game, and patience often pays off more than hasty moves. Investing in 2024 might seem daunting, but with these tips, you're well equipped to navigate the market. Why should you start investing today? Well, let's dive right in. Imagine a snowball rolling down a hill. It starts small, but as it rolls, it picks up more snow, growing larger and faster. This is the power of compound interest. When you invest, your money earns interest, but the magic happens when that interest starts earning its own interest. That's compounding. It's like that snowball, growing larger and faster the longer it rolls down the hill. The sooner you start, the longer your money has to grow. Here's a fun fact. If you start investing just $100 a month at age 25, by the time you're 65, you could have over $1 million, assuming a 7% annual return. It's never too late to start, but the earlier you begin, the better. The first step may seem daunting, but remember, every journey begins with a single step. Your future self will thank you for starting to invest today, so why not take the plunge?